This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Wednesday, supported by a weaker dollar, but gains were capped by mounting fears of a U.S. economic slowdown and the impact of tariffs on global economic growth. Brent futures rose 37 cents, or 0.53%, to $69.93 a barrel at 0951 GMT, while U.S. West Texas Intermediate crude futures gained 37 cents, or 0.53%, to $66.62 a barrel. Crude has been supported in recent days by a weaker U.S. dollar and the Energy Information Administration moving away from earlier calls of strongly oversupplied oil markets this year, UBS analyst Giovanni Stanovo.
Canada could impose non-tariff measures such as restricting its oil exports to the United States or levying export duties on products if a trade dispute with the U.S. escalates further, Canada's Energy Minister Jonathan Wilkinson said on Tuesday. When we are talking about non-tariff retaliation, it could be about restricting supply, it could be putting our own export duties on products. It could be energy and minerals, it could be broader than that, Wilkinson said in an interview with Reuters. He also raised the possibility of using non-tariff measures on critical minerals, which could force the U.S. to rely even more heavily on China.
Moving on to the top news in the energy sector.
U.S. crude oil and natural gas production, along with demand for natural gas and electricity, will all rise to record highs in 2025, the U.S. Energy Information Administration said on Tuesday in its short-term Energy Outlook report. The agency said it expects crude oil production to average 13.61 million barrels per day, BPD, in 2025 and 13.76 million barrels of oil per day in 2026, up from 13.22 million barrels of oil per day in 2024. It also projected domestic petroleum and other liquid fuels consumption would rise to 20.5 million barrels of oil per day in 2025 and 20.6 million barrels of oil per day in 2026, from 20.3 million barrels of oil per day in 2024. That compares with a record 20.8 million barrels of oil per day in 2005.
European buyers are unlikely to return to Russia's energy sector if sanctions are lifted, as the bloc has diversified its power mix with renewable energy and alternative gas suppliers, ministers and executives said at a conference in Houston. Ukraine has agreed to accept a U.S. proposal for an immediate 30-day ceasefire and to take steps toward restoring durable peace after Russia's invasion, according to a joint U.S.-Ukraine statement on Tuesday. The U.S. government is studying ways it could ease sanctions on Russia's energy sector as part of a broad plan to enable Washington to deliver swift relief if Moscow agrees to end the Ukraine war, Reuters reported last week. Next, we have the top news in metal markets. Iron ore futures surrendered early gains to trade lower on Wednesday, as sentiment was spooked by resumed market talks of China's plan of trimming crude steel output to rein in oversupply plaguing the industry. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.32% lower at 769 yuan and 50 fen, $106, a metric ton after touching an intraday high of 785 yuan a ton earlier in the session. The benchmark April iron ore on the Singapore Exchange slipped 0.8% to $99.95 a ton, as of 0744 GMT after touching the highest since March 3 at $102.05 a ton earlier.
President Donald Trump's increased tariffs on all U.S. steel and aluminum imports took effect on Wednesday, stepping up a campaign to reorder global trade in favor of the U.S. and drawing swift retaliation from Canada and Europe. Trump's action to bulk up protections for American steel and aluminum producers restores effective tariffs of 25% on all imports of the metals and extends the duties to hundreds of downstream products, from nuts and bolts to bulldozer blades and soda cans. Trump's hyper-focus on tariffs since taking office in January has rattled investor, consumer and business confidence in ways that economists worry could cause a U.S. recession and further lag on the global economy.
We will now look at the top news in the agricultural sector.
India's rapeseed and mustard output is likely to fall 4.7% from last year to 11.52 million metric tons in 2024-25, as farmers reduce the area planted with the oilseed, a leading industry body said on Wednesday. The area of winter-sown oilseed fell to 9.2 million hectares in 2024-25, the Solvent Extractors Association of India said in a statement.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.